The Swiss National Bank's policy is often viewed by markets as a credible one. The Swiss Central Bank meets this week to decide on monetary policy, so joining me now to discuss the Swiss economy and potential pressure on sustaining the Euro-Swiss franc floor is Steen Jakobsen, Chief Economist at Saxo Bank. Steen, no doubt tomorrow the SNB will reaffirm their commitment to defending the floor. Now, recent tests by investors recently got Thomas Jordan and government officials hinting at the possibility of further measures like capital controls. Right now, do you think this threat is likely to materialise?
I think it's too early to call that shot yet, as the policymakers in Switzerland clearly must be awaiting both the Greek election and secondly the EU summit on the 28th and the 29th, I think it is. So I think they want to keep the powder dry ahead of that. But of course, in terms of the monetary statement tomorrow, it's clear that they need to talk about their commitment to the floor. This has become a binary outcome, hasn't it? I mean, either it's black or white or plus or minus, and either holds or not. And I think if you look at monetary history, of course, the concern is that links like in Saudi Arabia and other links has eventually broken. One alternative success story, of course, being the Chinese-Hong Kong link, which has been in place and been holding. But from my point of view, I don't think the actual floor will fall right now or in any immediate future. And I think the only way it could fall is actually if Europe moves to a very dark place, so to speak.
The SNB's FX reserves surged to a record in May. At one point, do you not think that policymakers will have to pause and think, because surely the ceiling won't be enforceable in the long run? At some point, it must be up to the forex market again to determine the exchange rate.
As an economist, I'll say that no, because if theoretically the SNB can print money forever. So in the good old Keynes' version, the market or the SNB can stay irrational longer than the market can stay solvent. Having said that, of course, the precondition you need for printing money is also an economic environment that entails that printing money is okay. That was the case 6, 9, and 12 months ago. But right now, even the Swiss government is now increasing their growth forecast for Switzerland, and as such, they are erasing, taking away some of the reasons why you should be printing money economically. So now it's merely the fact they want to keep it. So I think ultimately the solution will probably be a crawling peg or something similar, because clearly the level of the Swiss is not a concern for Swiss industries overall, as they take a majority of their income in foreign currencies.
Swiss banks continue to park more cash at the country's central bank as sight deposits of domestic banks increased for a 5th consecutive week. Amid the Eurozone worries, do you expect this figure to continue rising?
I don't think anything will change before after the EU summit, and I think, as per usual, the EU summit will be a disappointment. So I think over the next couple of weeks, the capital flight out of countries like Greece, Spain, Portugal, Ireland will continue, and as such, the pressure will be for the Scandinavian currencies and the Swiss franc to remain strong.
So what are your predictions for Euro-Swiss franc going forward?
I still think, as I recently put out in a report, that there is a 75% chance that the floor holds, and I think eventually it could go higher. But you are codependent on what happens in Europe and the capital flight that continues to be on in Europe. So if the policymakers of Europe decides to do what I call an extend and pretend extension, buying time and trying to be credible, which they are not, then of course the pressure will remain, and you're a person in question about how SNB is going to be able to maintain this level of intervention becomes more predominant. But having said that, I expect that inside the next 6 to 8 weeks we have a commitment from Germany one way or the other, and depending on that, the decision tree needs to be that. But I'll say that, and what I pointed out in my recent report is, I think the single biggest risk, should Greece leave the euro, should the euro sort of starting to fall apart, and I'm not indicating that it's the most likely scenario, but if it should happen, I think the biggest single risk is that we go straight to parity without many chances of the S&P to intervene. But having said that, again, I'll stress that, in my opinion, the fair weather outlook of the floor being under attack but holding is my immediate and medium-term forecast.
The SNB has recently voiced concern about building imbalances in domestic credit and property markets in the context of a prolonged period of very low interest rates. The SNB will also publish its economic projections tomorrow for the Swiss economy. So what are your views on the country's medium-term economic outlook?
I think anywhere where you have a fixed fixed currency control, you create bubbles. You see this in China, you see it in other countries. So I think the greatest concern and the concern I will voice is that you need to do something about the mortgage market in Switzerland. I think the SNB will be very aggressive on that, and probably already tomorrow. Removing the ability to loan and fund down to whatever 50% or whatever is needed. And I think overall the S&P will talk about higher growth and stabilization, relatively speaking. But again, they don't want to be too optimistic, because that could give the illusion that they feel that they don't need to defend the 120. So I think it will be a balancing act all the way through the rest of the year, unfortunately.
Steen, thank you for that, and thanks again for joining me. Now, for all the latest financial news and Forex updates, do stay tuned throughout the day to Dukascopy TV. But for the moment, goodbye.